Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Happy Friday. Welcome to Modern Investing Techniques, episode 57. It's May 29th, 2026, and I'm Patrick in Vancouver. Friday wrap up. Let's see how the week played out and what to watch next. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canada's Q1 stall into technical recession tightens the lens on consumer discretionary names already guiding lower, while AI infrastructure demand keeps select tech names in focus for Canadian investors seeking growth outside broad indices. The S&P 500 closed at 7,564, up 0.6%. The NASDAQ Composite closed at 26,917, up 0.9%. The TSX Composite closed at 34,518, up 0.3%. 16 days ago, our ACM infrastructure pick closed down 11.35% after our contract win failed to hold once rotation hit. Our simulated portfolio sits at a cumulative $416.37 across 29 trades, with alpha versus the NASDAQ unavailable in the tracker snapshot for the exact window. Are we beating the NASDAQ this week? The data snapshot does not break out the weekly comparison, so we will track that forward. Sentiment remains split between Canadian recession signals and US AI server strength. Now let us move into the strategy spotlight on screening for high ROIC compounders. Return on invested capital measures how efficiently a company turns capital into profits after accounting for the cost of that capital. In today's environment of constrained consumer spending and selective AI demand, focusing on high ROIC businesses helps filter names that can compound even when macro data weakens. The approach starts with screening for companies posting ROIC above 15% over 5 years, then checking free cash flow consistency and competitive positioning. Platforms such as Wealthsimple or Questrade allow quick ROIC pulls via their fundamental data tabs. Cross-check against the most recent quarterly filings before committing capital. This screen worked best during 2018 to 2019 and 2022 to 2023 periods, when broad multiples compressed yet quality compounders still delivered. The main risk is paying too high a multiple for already recognized ROIC leaders, so always pair the metric with a margin of safety check on forward earnings. Canadian investors can run this filter inside a TFSA without triggering frequent trading concerns when the holding period stays at least several weeks. If you are using Questrade, export the results into a simple spreadsheet and rank by 5-year revenue growth next. That extra step adds discipline without extra cost. Now let us look at our practice investment of the day. This is a simulated trade for educational purposes only. No real money is involved. Today's pick is Dell Technologies, on the NYSE, in the tech sector. The strategy is a momentum entry on raised full-year guidance driven by NVIDIA-powered AI server demand. The hold period runs Monday through Friday. The catalyst is the company raising annual revenue and profit forecasts after reporting robust demand for NVIDIA-based AI servers. The technical setup shows a strong pre-market gap with nearest support near the prior week's close and resistance at the gap fill level. Stop loss is set 8% below entry to cap maximum loss. The target is plus 4% to plus 8% over the 5-day window if volume confirms and the AI spending narrative holds. Confidence level is medium because earnings revision and sector tailwinds align, yet only one confirming factor is present without volume data. This is the exact scenario where our earlier rule about volume confirmation would have helped avoid the ACM loss 16 days ago. We will track the position through next week and evaluate results on Friday. Remember, this remains a learning exercise only. Now let us review yesterday's flash trade. The last flash trade was SN Snow on a momentum entry after a raised revenue forecast, plus major AWS partnership. Entry came at $237 at market open and exit at $239.20 at market close. The position gained 0.93%, or $9.28 on a $1,000 simulated stake. The lesson learned is that the small gain showed the value of catalyst-driven entries, but also highlighted how quickly momentum can stall without sustained volume. The rule extracted from that trade states always require volume confirmation above the 20-day average before entering momentum trades on earnings beats. That filter now applies directly to names like Dell. Now let us cover two tools and techniques that support today's approach. Portfolio Visualizer is a free web platform that lets users run historical backtests on custom portfolios using ETF and stock data going back decades. Canadian investors can compare a TFSA mix of sector ETFs against the TSX Composite to quantify potential alpha before committing capital. Access the backtesting module with no login required for basic use. If today's ROIC screen interests you, this tool shows exactly how those names performed in past macro slowdowns. Prediction market data via Predicted or Polymarket APIs aggregates crowdsourced probabilities on events such as policy deals or rate paths. Pulling the API feed into a simple spreadsheet gives retail traders a real-time gauge of market-implied odds versus their own thesis. The edge comes from spotting divergences between prediction prices and traditional analyst forecasts before they converge. Both tools require only a few minutes to set up, yet add measurable discipline. Now for the quick hits. Statistics Canada reported annualized real GDP slightly negative in Q1, confirming a technical recession and raising the odds of further Bank of Canada easing later this year. Add XIU to the watch list for any dip below the 50-day moving average as a potential entry for broad Canadian exposure. Gap shares dropped 15% and American Eagle dropped 10% in pre-market trade after both retailers cut annual guidance, citing constrained consumer spending. Avoid adding U.S. apparel exposure this week and wait for stabilization above recent lows before considering any position. Equity indices in Japan and South Korea reached fresh highs as investors priced in a potential 60-day extension of the U.S.-Iran ceasefire. Hold CAD cash until volume confirms any rotation signal into international equities. Now let us check the portfolio performance numbers. Across 29 simulated trades, the win rate stands at 62%, with 18 wins, 10 losses, and 1 break-even. Cumulative profit and loss totals $416.37, with an average return per trade of 1.44%. The best trade reached plus 20.11%, while the worst trade reached minus 11.35%. Our AI analysis continues to learn from the volume confirmation pattern and is adjusting entry filters accordingly. Now, here is something that most retail investors get wrong, and it cost me money before I figured it out. Imagine you bought a consumer staple ETF last week when recession headlines first hit. Your order filled at the quoted price, yet the real mechanics between click and execution often include hidden costs that erode the margin of safety Buffett demands. Buffett evolved from Benjamin Graham's cigar butt bargain hunting to Charlie Munger's emphasis on quality compounders with durable economic moats. Key principles include staying inside a defined circle of competence, insisting on a margin of safety before purchase, and treating index funds as the default for most investors who lack time or edge. His notable wins, such as Coca-Cola and Apple, illustrate the power of long-term ownership of predictable cash flow machines. Professionals always verify whether a business can earn above its cost of capital for 10 plus years before committing capital. The biggest misconception is that Buffett-style investing means only buying cheap assets. Instead, always demand both quality and price discipline before entering any position. Before we wrap, watch for how Canadian banks and retailers open on Monday after the GDP stall data. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you